Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. We have another weekly watch list video for you guys here today. Our second week coming into the 2022 trading season. And what we saw in the first week, if that's any indication on what we are going to see for this week, and especially for this coming year, then we are in for quite a ride. So there's some things that I'm going to go over in this video that is definitely going to help you navigate a market that could be very volatile. So what we saw last week on Wednesday, when those minutes from a December Fed meeting were released, well, the market did not like it. So now we're back to, fundamentals. We're back to macroeconomic data, and the Fed moving the market. Now, the Fed used to move the market straight up. So we're seeing a little bit of a different story now, and the Fed is now moving the market down. It is what it is, but I do have to give so much credit over to our Discord group. We absolutely crushed it last week. We killed it because we were prepared. We came into the week very prepared. We had all our key levels. It's what we call our compass, right? So we look at the major indexes, we do the technicals, and we figure out where the market's going to go. One of the things we did last week was we were aware of the 2 p.m. Wednesday Fed, releasing those minutes. So a lot of us, sat on our hands. We waited and we wanted to see the market direction and the response to that. And then we did very well. So, give a shout out there to our Discord group. What I'm going to do here in the video, because there's a lot to get to, a lot of these weekend videos, it sets up the whole week. I need to be prepared going into a trading week, and I do think that you guys should do the same thing. I mean, it's only common sense. The more work, the more time, the more studying, the more reading you do on the weekend, the better prepared you're going to be going into the week. Trading is not easy. You don't want to pull up a stock and did no technical analysis on it and then have to fumble around and do it last minute. Start building a watch list on the weekends. That's what I do here today, and that's what I'm also going to show you guys in the video. So, some stocks that I'm adding to my watch list for this week. Last week, just very, very solid picks. And, I'm going to show you guys how and what led to that success last week. And it was just very simple, very, obvious things. Just by looking at the sectors, using ETFs, we were able to see each morning what the hot sector was. So on Monday, energy and banks, we saw they were at the top of the list. We saw all the volume pour in on Monday in the bank stocks, the energy, and they continued the entire week. So if you know what to look for and you have your basket of stocks ready to go, you're going to be so much better off, so much more well prepared. So actually, I'll just start there. These are the ETFs. Add these to a separate watch list. So on my Thinkorswim platform, every morning I have these ETFs in a separate watch list. I have the top gainers at the top, all the way down to the underperforming ones at the bottom. So we can see where is that money going. And, you want to be trading with the hot trends. So, we did that very specifically in last week's video and in our Discord to start the week. And I think it really contributed a huge amount to the success that we saw last week. So that's the ETFs. Let's see. This is what I want to show you guys as far as the macro, economic, fundamental type of news other than technicals that will move the markets this week. Something that doesn't show up here. Now, this is January 10th, which is tomorrow. Yeah, making this video before 6 a.m. on a Sunday morning. So stop what you're doing right now. Hit the thumbs up for the video and hit that thumbs up for all the work done while probably most of you are sleeping. So here we go. Monday, who cares? Tuesday, whatever. But now on Tuesday, it doesn't show up here. And this is where I do my research. On Tuesday, the Fed chairman, Powell, is going to be speaking in front of the Senate Banking Committee. He may update the economic outlook, following Friday's jobs report. He may talk about Omicron. He may talk about inflation. Who knows? But on Tuesday, be aware that somebody that moves the markets is speaking. So you got to be aware of that. That's on Tuesday. So right here, January 11th, be aware, do some research, find out what time he's going to be talking. A lot of these things last all day. They're very long. And then on Wednesday, we start to see inflation data. The CPI at 8:30, a market mover. We have the beige book at 2 p.m., a market mover. The beige book is what the Fed uses. That's what gathers all the economic data from all the different Feds around our country. They put this all together, they summarize it all, and they give it out, okay? It's going to basically, it's what they use to make economic policy. This will move markets. On Thursday, this is the producer price index. This could move markets. On Friday, retail sales. This also can move markets. So this week, we got kind of used to the end of December, the Santa rally, very easy times, right? There was not many institutional traders, which means there wasn't much selling. There was not much as far as economic data, and there was no real earnings to speak of. So there was nothing to get in the way, right? So that's changing. That's changing right now. So, buckle up. And this is another one. The 10-year yield. Guys, keep an eye on this. There's a reason why in our Discord, every morning in my daily briefing, I post these types of things. We need to watch these moves. The higher, excuse me, the higher this goes, that is not good for the tech stocks. And when it moves at the beginning of the year from 150 to 1.76, which is the highest it's been in almost 2 years, well, that's definitely going to cause some issues with those high growth, crazy high valuation stocks that are making no money. It's just even the ones that are making money but have high valuations, this starts to affect that when you have such a quick move. Markets don't like surprises, which is what we saw when the Fed released the minutes on Wednesday. It was definitely a surprise, and that's why we saw the market go down. Well, the same thing here. This is a surprise. This is a very quick move coming off of the Fed meeting. And the NASDAQ does not like that. So that's a couple of those issues. This is another one. This thing has just Bitcoin almost dumped under 40K right here. Right here, it was just over 40K. and got a nice bounce to 42, but is now starting to bleed out even more. I mean, the past 5 days, 10%. 10%. I mean, the last 3 months, this thing has been an absolute epic disaster. The dips are not getting bought, which has been the difference this time around. All right, so we went over that. We went over that. Why don't we look at the earnings for the week? Earnings season officially kicks off with our banking stocks. We have JP Morgan, Citi, BlackRock, Wells, Jefferies. We have the beautiful start to earnings week here. Delta, it always starts with, some of these type of value stocks. These are all, kind of like that reopening type play. You have Tilray on Monday, our weed stock. So that's it. This is how it's going to start. So pretty slow. And then Thursday, we're going to see the airlines and we're going to see the start of the financials. So I would say at the beginning of the week, you might still see some strength into the financials. And then unfortunately, when the banks report, at least some of them, they usually sell off after their report, I've noticed, even if their reports are really good. So you might get some more strength here at the beginning. And then on Friday, if you are trading around earnings, you do what you want. I'm not here to tell you what to do, but I'm just telling you from a pattern trader, these usually will sell off, especially Citi, after they report. So just keep that in mind. And let's see. I think we can start going to our compass now. Well, let's do this first. This is our Discord. If you're interested, the link will be in the description. This is the group that I trade with every day. All weekend we talk. We discuss game plans. This is where they see my daily preview every single morning. And I do have to say, we're off to a heck of a start in 2022. So congratulations, guys, out in our Discord. See you guys a little bit later on this afternoon. Obviously, we'll discuss those stocks that we're looking at for the week. I post those for our members in our Sunday picks. So let's get into this because I know this is what we're waiting for. We have to look at our compass. Where are we going? Where is the possibility where we may see some support? Where is the possibility for that resistance? So for a year and a half, this is the QQQ. It's an ETF that follows the NASDAQ. Very clear trend lines from the tops to the bottoms. Very clear. It hits the bottom, it goes to the top, it hits the bottom, it gets back to the top, it hits the bottom, it gets back to the top, and now it's starting to consolidate around here. Now, in last week's video, we were extremely cautioning everybody in that video and in our Discord about this. This is what I noticed going into the week. I said, guys, we're still above the 50, but we are going into some really heavy resistance. We just could not seem to, break out of this area. So I said, why don't we wait? Let's wait and see what happens if we can break out. We saw that bit of a rally. It was fun. It was good while it lasted, but it wasn't really much of what I like when I'm looking at volume profile. We know that the Santa rally, we know why it happens, but I mean, you go up on declining volume, and then we sell off on elevated volume. I don't like that. And I pointed that out while this was going on. Yeah, it's great. It's going up so much so fast, but on declining volume, which means that that move will most likely not hold up. And that's what we warned here. And then we see accelerated volume, more volume, and then we see that sell off again. So, keep in mind, don't just look at this. You got to look at volume. You got to look at RSI. There's a lot that goes in. So anyway, this is where we're trading right now. So from November to into this year, this is our range. Our low is down here at 377.47, which is what we hit here at December 20th before that Santa rally. So right here, if we make a lower low, let's see if we can try to zoom this in a little bit. If we make a lower low from the December, let's see if we bounce off of this trend line. This is the trend line. Like I said, guys, a year and a half in the making. If this trend line ever breaks, I think we're in for a pretty decent sized correction on the QQQ. We're here now. So what we're going to be looking for this week, and keep this on watch. If we break under 37747 on the Qs, that will mean that we broke this December 20th low. So when you start to make lower lows, that's an issue, especially when you have some very weak market structure here on low volume. I don't put anything into this. So selling off on higher volume, I put into that way more. That means institutions, hedge funds have been selling. So if we break that, then I'm going to be looking at obviously this trend line around 375. So if that breaks for the first time in a year and a half, now you have some different trends being broken, and that gets me a little bit more bearish. So we'll see. We'll keep an eye on this. Maybe we bounce here and then we go to the top again. And if that happens, well, then that's when you could go into your NVIDIA, Apple. There'll be plays that you can take here. But wait, let's see what happens. Let's see what happens, because this is not a good sign. When you have a big sell-off and then the next day it does nothing, and then the next day it starts to go lower and closes lower, that's bearish to me on higher volume. So just keep that in mind. That's the NASDAQ. This is going to be, kind of correlating to with that 10-year Treasury and the Fed. So, and the CPI. So all this kind of comes together. So that's the Qs. This has been holding up a lot better. This is the Dow Jones Industrial Average. This is sort of our value, our reopening, our rotation play. And that's what we're seeing here this year. This is holding up on a relative basis way better. I mean, we're over the 50, we're over the 20 EMA on the daily chart. So this is still very bullish. We're making higher highs. So a very nice bounce here on a beautiful hammer, bullish hammer candle right off of the 200, and then just rallied up. And then last week when we saw the big sell-off, we didn't see it here. The Dow held up pretty decently for the week. So where we started the week and where we closed the week, we were only down very slightly to break even on the Dow. The NASDAQ down almost 5%. S&P also held up better, because that takes the best of both worlds. So that's what the ES is. Now on this one, this is what I was talking about again with market structure. We saw the Santa rally get up to here on weak structure, low volume, the volume profile declining, the selling profile increasing. Not good, not what I like to see if I'm bullish. So at this point, this move never held up, and now we're back under 47.10 on the ES with this big sell-off here. So, and another one of these things that you have to start to notice when you're looking out at a daily chart, when you start to see where you're kind of stalling right here. Look at this area here. And then you see these sell-offs. You get the move up and then you're stalling. There's just no more buying pressure being, put into play here. And like I showed you on the volume, we're stalling at this point, and then we start to sell off. So when you see price stall at all-time highs, be aware that there could be sell-offs coming. So just keep that in mind. That's a little trick, a little tip from somebody that's been watching the markets for a long time. We're still over the 50, right? We closed basically at the 50 on the ES. So right now, going into tomorrow, we're going to be watching these levels. We want to see if we break and start to close under the 50, which has been epic support all year long. You break under it, the very next day you're over it. I mean, it's bounced off the 50 every time. This was the little correction that we saw here back in September. That was good. That was a good correction. And then we rallied. Will we see the same type of thing happen? You're going to notice if you start to break the 50, like we saw here, came back up, could not break above it, and then sold off, came back up to the 50, could not break above it, sold off, and then finally broke above it, retested it, and then went. So watch that 50. Everybody on the daily chart, put the 50 moving average, especially for the SPY and for the ES, because that all year long has been using the 50 as support. So when we see patterns start to break, that's when we start to get, a little bit aware of, okay, I think the market could go this way now. And that's why we use these as a compass, the big picture as a compass, to see where there's weakness, to see where market structure may be, where there may be support. And, the ES is definitely holding up better than the Qs, not as good as the Dow, but the Dow and the NASDAQ will balance the ES out. So as long as the Dow holds up and, we don't see a crazy amount of selling in the Qs, and I think we'll notice that this week, if we break those key levels on the Qs, well then, this is obviously going to come down too, and the SPY. So just keep in mind, you don't want to just follow one index. You have to have your Qs, you have to have your DIA, which is the Dow Jones ETF, and then you want the S&P 500. Take that big picture approach and you will be so much better off. All right, so that's that. We went over the different things there. Now let me show you, this is the ETFs that I have on a separate watch list. So when we came into the week on Monday, straight off of all our prep on the weekend, we were watching to see what the hot sectors were. The hot sectors all week, banks and energy. They absolutely killed it, especially on a relative strength when the market's selling off and these things are diverging from that. Beautiful sign. So that's what we did on Monday. We got into, call contracts on financials and absolutely did a tremendous job. And that was all because of watching these hot sectors before the market opened and watching that volume and seeing where the big money institutions were putting their money, the big mutual fund buys. And that all happened on Monday this past week in energy and financials. So going into this week, like I said, watch those ETFs. A very simple thing that you guys can do, just put that on here. And then just from the top, from mark change, we'll just look and see which ones are the hottest for that particular day, that week. And that's a good thing to keep on watch. So getting into my watch list. Now, I'm not watching all of these, but I am interested in keeping these still on my watch list. So some of these are from last week's watch list. We have watch lists from, previous weeks. And this is where we do our technicals. I want to show you guys something very interesting. This is ASO. For those that have watched me for a while, know that I absolutely love this stock. And you can see here, what do you not love about something that was at 12 that went all the way up? And not only that, the whole year, higher highs, higher lows, higher highs, higher lows, higher highs. Now we started to break down. And this is something that's not breaking down for any other reason. I mean, their fundamentals are tremendous. Their valuation, very low PE. This is still a very solid, great buy. So, just keep this one on watch. But what I want to show you is this trend line that we're looking at for the entire year, that we've been showing these bounces, and we've played these bounces before, got very hairy right here. And look at this one candle from earnings, went from 4263 all the way to 4750, which was previous resistance, and then sold off. For whatever reason, they get sold off like that. And, they had the just great earnings, just killed it. They raised their guidance, everything you would want to see in a report, but the market participants sold it off for whatever reason. We got the bounce off the 200, and that's where we retest this trend line. The trend line for the whole year got above it, and this is not a great candle to see. Zooming in, that is a bearish candle. This is like a gravestone doji, not a good candle, following up with 4 days of more selling. And it happened right at the trend line. It happened right at the 50 moving average. Now that's technicals. That's technical analysis that has nothing to do with the fundamentals of this stock. That is a technical play. So this is still very weak. This is weak until we can start to make those higher highs and higher lows. So let's watch where this goes. Will it come back to the 200? That would be retesting it pretty quickly. I would like to see this one turn right around, but it is still making lower highs. You have a high up here all time. You have a high here at super resistance. I mean, to break 4750 is going to be a challenge if anyone's watching this stock. And then lower highs here on just terrible candlestick right there. So at this point, this is not touchable until we start to see a bit of a support. Because at this point, I mean, the stock is up so much, we don't know where support is. Support was the trend line. Right now, we don't really know where that support will be. Support was an indicator, the 200 moving average. So ASO is still on my watch list, but am I telling anybody to buy it right now? Not really. I mean, you got to see where this thing starts to settle down, because these are not good signs from a technical point of view when you see that these levels can't get broken. Let's see, what else are we looking at here? This is what we called out last week and the week before. Just crushed it. The energy sector absolutely crushed it. Now, what's happening here, though? We're coming up to that top resistance line right here. Will we break above it and hold it? That is what I'm waiting for. That's what I'm looking for. Am I going to buy it right here? No, I'm not going to buy a breakout at a resistance level that has sold off every time it's hit it. So let's wait. Let's see. This was a heck of a move here. Just a huge move in the energy found on the ETFs. It was leading the market all 5 trading days. That was something that you want to get in. And like I said in our Discord, when we were looking at the financials, I said, you guys, on Monday, you're going to want to get in quick because they could move very fast once the institutions and mutual funds start pumping the money into them. They can really move quickly. And you could just see here the volume. Look at how much more volume there was on these days, just being absolutely gobs of money put into energy. Nice breakout here of this descending resistance trend line. This was the break that we were talking about. This was in last week's video. This was in our Sunday picks for the week. It broke out very nicely. So that was a good play right up to the top of the trend line. Keep in mind, if we go out, okay, we're on the 10 years. So if we go out here, we can see where this was trading at before coronavirus. It was, starting to sell off. We see this type of thing. This was the last time the Fed rose rates. The whole market sold off. We just basically got very close to being in a bear market. The market sold off 20% the last time the Fed raised the interest rates. So that's part of that. But I mean, this still has room to go up to 75, up to the 60s. So let's see where this one ends up. It's been a very nice recovery play. And this is going to be a recovery play, once coronavirus slows down, once travel picks back up, once people aren't afraid to go out, vacation, business travel, that energy and the oil prices usually will follow that. So while it's made huge moves, it still has room to get back to where it was trading at before, the pandemic hit. So keep that in mind. XLE, that's our energy ETF, and it's been leading the market. So you're going to want to watch those, the ones that are leading the market. Some of the plays on that, well, Chevron is one of them. This one is back to basically before the pandemic. So would I recommend buying this now? Probably not, especially after a huge move like that. But these are still going to be on my watch list. XOM, this is mobile. This is another one. This was trading here at 80s, almost 90 before the sell-off and then the recovery. Once again, this is looking kind of like the energy ETF. We're coming up to the top of this trend line. Know that you're at the top. You're at a resistance level here. Couldn't break it here, couldn't break it here, couldn't break it here. Could not break it here. Can we break it here? I don't know. Just have to keep in mind when you have this many green candles in a row, yes, it could still go, but you might see a little bit of a pullback before the breakout. But the reason why mobile is doing well is they pay a dividend. These are good inflation plays. These are that rebalancing of portfolios that I've been talking about. This is where the money has been flowing. So this is a good stock to own in a year like this. And that's why it's showing some strength. Now let's get to some stocks that if the NASDAQ holds up at support, NVIDIA is at support as well. Now, this can be played one of two ways. You are, sort of making lower lows here, lower highs here, but you're not making lower lows. Right now, you are at a clear level of support that we have seen multiple times, but you're under the 50. The last time we were really under the 50 for a long time happened back, back here when it closed under the 50. It then took some time to get back above it. This is the first time since, back here in October that we went under the 50, or right here in September when we came under the 50. So while the 50 is way more elevated now because the stock prices, we're at support. So we have not made a lower low yet. If we break 271, 270, we go into the 260s, well, that could give us a put play, because now you're breaking key support. Once that happens, and that's going to happen if the NASDAQ continues to sell off, this could be a play here. So keep this on your watch list on Monday, Tuesday, Wednesday, whatever it is. If we see the NASDAQ show some strength and start to base out, well, then this could be a bounce off of previous support. So keep NVIDIA on your watch. This is a massively high attention type of stock. MGM, another one. This is starting to make that curl up after this sell-off. We're starting to make higher highs, higher lows, higher highs, higher lows. We're bouncing off of this trend line. We're getting above the 50. This has a lot of room, guys. This has a lot of room to go. From here to the top, that's 22%. 22%. So that's why this one's on my watch list. This is one of those reopening. Betting. Betting just got legal in New York. They have their apps. Their digital business is growing. So this one, keep on watch. This is definitely the start of that curl back up. So this is looking good. This could be a decent entry here. So MGM, that's why that one's on my list. The another one I want to show you guys is, this is the Russell 2K ETF. So this is those small cap stocks. Very clear level of support the entire year. Once again, if this breaks, that's not going to be great for the market. Now, GameStop, I believe, is in here. AMC is in here, having some big weighting or whatever towards it. GameStop is not looking so good. Even after the NFT reporting, it got a big boost up and then just nobody wanted it. So we'll see. It rejected the 50, coming back down possibly to support, which I've gotten here at about 208.75 is where we hit here and where we bounced here. It's been in a range. So I can't assume when it comes down here that I'm going to get short right away. Why would I do that when it's bounced the entire year? You got to wait and see. If this cracks on a retest, that could be a time to maybe be short a little bit. But right now, this is just trading in a range. Support is very clear. Let's see what else I got here. All right, looking at, I think CrowdStrike was interesting, but I'm not a buyer on it. But what I did like, what I saw, are these last couple trading days, and it's a bounce again off of the year support. We're seeing that here. It might just be one of those, quick little technical day trading type of bounces until it then sells off and under here. Because once again, these stocks are the valuations are through the roof. And people are having trouble valuating these stocks because they have very minimal earnings. They're, very, very expensive stocks. And with rates being risen and all this other stuff, that's why these have been selling off. But this one started selling off, months ago. Huge sell-offs. And CrowdStrike is a very solid company. Very solid. in the cybersecurity, this is going to be something that we're going to need definitely going forward. So will this be, it's kind of a divergence on that tech sell-off. Seeing that bounce here, seeing a good day here to end the week. Let's see where this one goes. Would I be a buyer here? Probably not, because it does look like it does this. So it'll bounce, come back to this level here, sell off a little bit more. And now the next level could be where we were seeing support here. So this could just be a little bit of a fake out and then a break under. But CrowdStrike's still going to be on my watch list. And, I'm showing you guys these stocks that are on my watch list, but they're not screaming out buys to me. MGM, that one looks pretty decent. Some of the bank stocks, they've already kind of had their breakout. I mean, if you buy it up here, I think you're asking for trouble. I mean, look at the RSI, overbought, very clearly overbought. And, with earnings like right around the corner, I think we just have to be patient, be patient, watch those ETFs in the morning, like I said, and I think we go from there. So that's it. That's a wrap on the weekly watch list video. I know these are a little long, but it is what it is. There's a lot to get to. So hit the thumbs up like I asked before, please. Thank you so much. And I will see you guys in our Discord, and I'll see you back tomorrow with a new video. Take care, guys.